Inflation may have gotten a bad rap in the last few years, but it is not necessarily a bad thing per se. My name is Selena Ling and I'm the Chief Economist for OCBC. High inflation is not unique to Singapore, but thankfully we have seen the peak of inflation and inflation is gradually subsiding. Singapore's core inflation came in at 3.1% in January this year. That is down from 3.3% from December last year, and well off the peak of 5+% that we saw much earlier. This probably means that inflation is subsiding, but is it coming off fast enough? There are both external and domestic factors that are driving inflation. First off, we've had geopolitical tensions such as the Russian-Ukraine war, the conflict in the Middle East, and also some of the tensions that we're currently seeing in the Red Sea. All this adds up to higher logistics costs and also some delays. On top of that, we also see domestic factors like the hike in the GST, carbon prices, and also high cost of doing business in Singapore. It is important to note that the pace of inflation is moderating, but prices are still rising because inflation is the rate of increase in prices. It just means that it's not rising as fast as what it was doing in the previous 1 to 2 years. So there have been a lot of domestic price adjustments, public transport fares being one. On top of that, we have water prices going up from the second quarter of this year. I think going ahead, if the Singapore labour market continues to remain tight, demands for wage growth will also persist. And that also means that businesses have to factor in all these higher costs of doing business. And because aggregate demand generally is faring well, that means businesses are more confident about passing on some of these costs to end consumers. So inflation in itself is not a bad thing, even though it's gotten a bit of a bad rap in the last few years, mainly because inflation, if it's demand-driven, demand is healthy, and it drives up the prices of goods and services, and that actually sends a signal to manufacturers and producers to actually produce more. So a little bit of inflation is actually reflective of a healthy economy. But I think what we are worried about is excessive inflation. Thankfully, our inflation rate is subsiding. A lot of this has to do with monetary policy tightening by the MAS, but also a lot of the cost of living assistance that is being provided by Budget 2024, for instance. So we have seen repeated top-ups to the assurance package and a lot of fiscal transfers to help the more vulnerable and low-income households. So at the end of the day, 2024 should see growth improve slightly to around a 2% handle from 1.1% last year, and inflation should hopefully also subside to around 2.5 to 3.5% this year for both headline and also core inflation that strips out private transport costs and accommodation costs.